Your 30s. That's when life suddenly decides to throw everything at you at once. One moment, you're celebrating your first decent paycheck, and the next, you're staring at a mortgage application thinking, wait, how does anyone actually afford being an adult? Your bank account? Pulled in every direction. Kids need college funds. Houses need down payments. Retirement accounts are screaming for attention. And somehow, you're supposed to stay sane. Here's the thing. No one tells you this. Most people think your 20s are for figuring things out. But your 30s? That's when you realize you should have already figured them out. And if you get this wrong, I'm serious. It could cost you decades of stress, money, and freedom. So what exactly should you be doing right now to avoid financial disaster in your 30s? Well, stick with me, because I'm going to break down 10 life-changing financial milestones that could completely transform your future. And number 6? It's something almost everyone totally ignores, and missing it could ruin your wealth. Hey, I'm Ryan, and I help people build wealth without losing their minds. If you're ready to take control of your money, hit that subscribe button and give this video a thumbs up. Trust me, you're going to want to stick around for the full list. Milestone 1. Eliminate all consumer debt. All right, let's start with a big one. And yes, I mean completely. Zero. Gone. The only exception? Your mortgage. Everything else, credit cards, student loans, car payments, that random furniture loan from 3 years ago, all of it has to go. You might be thinking, Nick, that's impossible. My student loans alone could fund a small country. I hear you. But here's the reality. Your 30s are your prime earning years, and debt is like quicksand for your money. Imagine this. $400 a month on credit cards, $600 on a car loan. That's $1,000 every single month. That's $12,000 a year. Over a decade, $120,000. And we haven't even talked about what that could have earned if invested. Your 30s bring chaos, career pressure, family responsibilities, kids, aging parents, juggling debt through all that is like juggling flaming torches while riding a unicycle. Sure, you can do it, but do you really want to risk it? I learned this personally when my dad tried to fix a clogged sink with just a plunger and sheer confidence. Spoiler, it didn't work. If I'd been drowning in debt payments, calling a plumber wouldn't have been an option. We'd have had a flooded kitchen and one very grumpy dad. Stick around, because Milestone 2 might just save you tens of thousands on your next house if you pay attention. Milestone 2, build an excellent credit score, 800 plus. Here's something most people get wrong. They think credit scores don't matter if you're not borrowing. Wrong. Unless you're buying a house entirely in cash, which, let's be real, most of us aren't. Your credit score literally decides how expensive that house becomes. Quick example. You're buying a $400,000 home. With a 6.5% interest rate, you'll pay around $511,000 in interest over 30 years. But with a slightly lower score at 7%, you're paying $558,000. Yep, nearly $50,000 more for the exact same house. And it gets worse. According to LendingTree, one payment over 30 days late can drop your score by up to 180 points, and it stays on your report for 7 years. One tiny mistake could cost you tens of thousands, maybe enough to make you rethink your dream home. Keep your score high with these simple habits. White heavy checkmark, pay every bill on time. White heavy checkmark, keep credit utilization below 30%, ideally under 10%. White heavy checkmark, avoid opening unnecessary new cards. White heavy checkmark, don't close old accounts unless they cost you fees. Your credit history length matters. Protect it. Trust me, Milestone 3 is going to make you wish you'd started planning 10 years ago. Milestone 3, create a 30-year financial plan. 30 years ahead. Isn't that overkill? You might ask. Well, without a plan, you're basically playing financial whack-a-mole, reacting instead of winning. Here's a simple framework I use, Brett. B. Budget and save. Know what's coming in and going out. R. Retirement. Contribute consistently and stay on track. E. Estate planning. If you have kids or assets, this is essential. T. Tax planning. Use every legal way to keep more of what you earn. T. Track progress. Review and adjust regularly. If your finances are complex, a good financial planner can help you see the big picture. Because trust me, missing even one piece can derail everything. Hold tight. Milestone 4 is about something that most people completely ignore until it's too late. the emergency fund. Milestone 4. Build a bulletproof emergency fund. In your 20s, people said 3 to 6 months of expenses. In your 30s, you need 6 to 12 months, maybe more if you're self-employed or have unpredictable income. Why? Because emergencies get bigger. Water heater dies. Car breaks down, expensively. Your kid needs dental surgery. Parents suddenly need help. And sometimes, emergencies aren't bad at all, like that once-in-a-lifetime investment opportunity that disappears if you're not ready. An emergency fund isn't just security, it's freedom. When you know you're covered, you can take calculated risks, negotiate better, and sleep peacefully. Keep it in a high-yield savings account. Easy access, but still earning interest. Remember, you're protecting yourself, not trying to get rich overnight. Stick around, because Milestone 5 will show you how to turn a modest salary into a $1 million retirement, and you'll want to take notes. Milestone 5. Have 3 times your salary saved by 40. The average 40-year-old in the US earns about $62,000. That means by 40, you should aim to have around $186,000 saved for retirement. Not there yet. Don't panic. Start now, invest consistently, and compound interest can turn that into over $2 million by 67. The key is time. Every year you delay saving is growth you'll never get back. If you're behind, start today. Even small increases in contributions, from 10% to 15%, over 25 to 30 years can make the difference between retiring at 60 or working until 75. And trust me, Milestone 6 will reveal a trap that destroys wealth faster than taxes ever could. Milestone 6. Beat lifestyle inflation. This one separates true wealth builders from everyone else. Your 30s are prime for lifestyle creep. A raise means a fancier apartment. A bonus means a luxury car. I know people in San Francisco making 6 figures who are still broke. $70,000 cars for $1,000 apartments, eating out daily. It's like pouring water into a bucket full of holes. The fix? Automation and awareness. Whenever income rises, automatically move at least half into savings or investments. Got a $5,000 raise? Send $2,500 straight to your future self. You won't miss it, but your future you will thank you. Wait till Milestone 7. It might sound morbid, but it's one of the most loving things you can do for your family. Milestone 7. Get your estate plan done. Yes, it sounds morbid, but if you have kids, a mortgage, or assets, this is one of the most caring things you can do. A will, power of attorney, and guardianship plan aren't about death. They're about making sure chaos doesn't touch your loved ones. Without them, courts decide what happens to everything you own and everyone you love. The good news? It's easy. Start with online tools, or hire an attorney if your situation is complex. Something is always better than nothing. Next, Milestone 8 will reveal the biggest financial asset most people ignore, and it's not money. Milestone 8. Invest in your health. Your health is your biggest financial asset. The average American spends $300,000 on healthcare in a lifetime. Cut that by 20% through healthy habits. That's $60,000 saved. Plus, fewer sick days, more energy, and better quality of life. And yes, metabolism changes in your 30s. I used to eat pizza 3 times a day and stay the same weight. Now I look at a donut and gain 5 pounds. Start now. Move regularly. Eat well. Sleep properly. Manage stress. The money you spend here is far cheaper than medical bills later. Milestone 9. If you have kids, this one is non-negotiable. Milestone 9. Plan for your kids' education. College costs have outpaced inflation for decades. A 4-year public university averages $40,000 a year. Private ones around $70,000. You don't have to fund everything, but start early. A 529 plan grows tax-free, and withdrawals for qualified expenses aren't taxed. Many states even give deductions for contributions. Even $50 to $100 a month compounds massively over 15 to 18 years. And if your child doesn't use it all, you can roll it into a Roth IRA or use it yourself. And finally, Milestone 10, the one that ties everything together. Milestone 10. Build financial confidence. This is my favorite. Financial confidence isn't about how much you have. It's about knowing what's happening with your money. It means making decisions calmly, even when markets dip. It means having systems, emergency fund, retirement, insurance, education, estate, all aligned toward your goals. You can build it yourself or with a planner. What matters is that your plan adapts as life changes, and you trust it. Your 30s are your financial prime. High income, compounding on your side, and major responsibilities. The choices you make now shape your 50s and 60s, whether you're stressed about money or enjoying peace from discipline. These milestones aren't here to overwhelm you. They're here to empower you. Pick one or two, start small, maybe pay off that last card or open that high-yield savings account. Because, just like your investments, small, consistent actions always compound. And if you follow these steps, your future self will thank you every single day.